Hello, my name is Mamuka Tsereteli. I'm a senior field fellow at Central Asia-Caucasus Institute at American Foreign Policy Council. And I welcome you all to this webinar online session that we co-host several organizations, Central Asia-Caucasus Institute, Rumsfeld Foundation, and CAMCA network. I'll explain in a minute for those who don't know what CAMCA means. But I would like to start with the topic of the conversation today and discussion is developing capital market and regional funding institutions in CAMCA region, important tool for post-COVID recovery. We have excellent lineup of speakers with experience in private sector as well as in public policy making, which should make our discussion, I think, even more interesting. So our assumption is that while public sector is very important during the pandemic, dealing with the healthcare situation and challenges, after COVID, once the recovery period starts, private sector will play a more important role in providing obviously jobs and supporting process of economic recovery. So our speakers today include Mr. Atabek Nazirov, who is chairman of Capital Market Development Agency of Uzbekistan, Mr. Bektemirov, chief economist at Astana International Financial Center, AIFC, and member of the management board of AIFC, Mr. Nika Kurdiani, who is a deputy CEO at TBC Bank from Georgia, but also bank that operates now in the region in Uzbekistan. I believe Nika is in Tashkent today. Mr. Abdullo Kurbanov, co-founder and CEO of Alif Bank and CAMCA network member from Tajikistan. Mr. Ahmad Yama Bassam, co-founder of Arden and Bassam Partners LLC and the World Bank International Resident Banking Advisor to Bank Milli Afghanistan, from Afghanistan. And Mr. Irmun Demberel, Vice President of the Mongolian Economic Cooperation Confederation, also a member of CAMCA network from Mongolia. For those who don't know, again, CAMCA stands for Central Asia, Mongolia, Caucasus and Afghanistan. It's a regional forum, non-political, non-partisan, established to promote region-wide discussions on means of advancing economic growth and development in Greater Central Asia region, which includes, as I mentioned, Central Asia, Caucasus, Afghanistan, and Mongolia. It's created by Rumsfeld fellows, fellows from Rumsfeld Foundation who visited the United States in different cohorts in last more than decade now. And this CAMCA network is creation of this group of fellows. Today we'll try to discuss, as I said, few questions, important questions, how regional potential funding sources could support post-COVID recovery, what government policies could facilitate the enhancement of these funding institutions, and what are the opportunities for the foreign private funding institutions to join forces with the regional players as well. So without further ado, I would like to ask Mr. Atabek Nazirov to start his presentation. Atabek, please.
Thank you very much, Dr. Tsereteli. It's very honored to be here with you today. And I would like to say that initiatives like this for further discussion in engaging regionally is extremely important to develop regional cooperation. We believe in order to develop, diversify funding sources, to develop economies in the situations like we have at the moment, it is extremely important that we focus on facilitating adequate infrastructure environment. That is important that we find a way to defend appropriately minority investors, that we ensure the rule of law prevails. I think these are the fundamental basics that are required for any capital market infrastructure, because every investor that is willing to invest in capital markets, will be looking for independent regulator. They will be looking for independent judiciary system. They will be looking for the rule of law. So why I'm saying this, in Uzbekistan, as we develop capital market reforms, we have done kind of a very detailed analysis of what are the kind of missing points, what are the weaknesses of our system to develop capital markets. We have a solid banking system, I believe, in my view. Its size of the banking system equivalent half of the Uzbekistan's GDP. Yes, it is probably dominated by the state banks, but we have a lot of mid-sized banks and small-sized privately owned banks that are growing. The capital market, which is the second wing of the financial system of any economy, is yet to be developed. It is tiny. The total size of capital market, I think in Uzbekistan, is less than 5% of GDP. And I'm talking about kind of market value of listed companies or the bonds that are listed in Uzbekistan. So we have way to grow. And in order for us to diversify, as you meant, you have a question here. So what do we do to diversify the sources? Kind of my personal view, obviously, we have to look, number one, inside. We need to find a way to raise confidence of domestic savers, of domestic investors, because domestic business people, domestic entrepreneurs, domestic folks who accumulate the wealth domestically are number one long-term investors in any economy, which means we need to focus on forming of private pension funds, for example. We need to help to grow insurance companies in Uzbekistan, which entails massive insurance sector reform. And in order to then attract and build interest of international investors, all of them ask, who are the local investors? Because number one, if you don't have confidence of your local investors, you will have a very difficult time attracting international investors. And that's kind of lesson we're learning as we're progressing and as we talk with international investor community. And I'm excluding lenders. When we talk about investor, I'm excluding lenders, because when it comes to investor base that is providing, let's say, fixed income, what we call loans or bonds, particularly those that are linked with the state guarantee transactions, it is a little bit different story. We're focusing now on mobilizing private capital, because ultimately private capital will drive, I think, and will facilitate the most innovative investment projects. It will find a way to efficiently allocate capital from private hands into private businesses. So we've started a massive reform. As you might know, I don't know if I will mention, about a year ago, we've, together with EBRD and Asian Development Bank, have done a massive work in trying to put together a strategy for capital market development for year 2025. Unfortunately, with COVID, things have not been progressing as fast as we would hope, but we're now slowly back on track. And the goal of the reform of capital market in Uzbekistan is introducing unified regulation that will be understood by both international community and domestic community. It's bringing a status for the regulator, increasing the independence of regulator in Uzbekistan to make sure that we can act independently, that we can act in good faith and protect investor rights. It includes a series of programs of how we engage international asset management community to Tashkent, because without professional skills, without professional know-how, it is difficult to develop those institutions domestically. We're discussing ways how to integrate our exchanges. We have a stock exchange, we have a currency exchange, we also have separately a commodity exchange. I think maybe it's a bit too much for a small country like Uzbekistan. We need scale, but at least we could start with integrating those so that we can add more products. And moreover, one of the key elements of developing domestic capital markets is how do we embrace, how do we go forward with our privatization program? Because in Uzbekistan, we still have a lot of state-owned enterprises, state-owned companies and banks that need capital. Yes, they're used to borrowing loans, but one thing we're doing at the moment is helping them to raise money through bond issuances. So we have decreased and I would say deregulated a lot of the strict requirements on bond issuances. And we hope that it will become an interesting instrument for both investors and these companies to raise. We're actually introducing another product, which would be a Sukuk bond. It's been open for discussion now. We prepared what we call a draft regulation for that in the form of presidential decree. The Sukuk product, we hope, will be very popular in Uzbekistan. It's a country with tradition of Islam, and I hope in the near future, maybe early 2021, we'll start introducing Sukuk product. So a lot of initiatives, and as I said, to kind of maybe summarize, I don't want to preach too much. I would be happy to do the Q&A day after. But the idea what we have at the moment, we've done a diagnostics of all the problems in capital market development. I am a strong supporter of really developing domestic capital markets. I see a lot of risks when you go out and start funding your economy through dollar-denominated loans. It carries risks of currency devaluation. So building confidence of domestic investors, building confidence in a national currency is important, which all comes at the very heavy exercise of ensuring that the rule of law prevails. You have independent institutions, you have solid regulator who can act in the interest of domestic investors. And we hope that over time, it will bring to fruition a lot of our initiatives. I will end here, Dr. Tsereteli, but I'll be happy to answer some specific questions later on.
Thank you, Mr. Nazirov. And before I'll turn it to Mr. Bektemirov, I would like to say that those who watch this webinar could post their questions in Q&A section of the Zoom display. So, and we'll be happy to ask questions to our speakers on your behalf. Now, Baur, sorry, floor is yours, sorry.
Thank you, Mamuka. And yes, I represent the Astana International Financial Center, and our goal is to improve financial sector, financial intermediation in general. But to put some structure to my remarks, I just want to just go over the basics. So in order to support the economy, economic recovery, the government and regulators can do two ways. They're either cutting the costs or providing more funding or providing more channels to funding. On the cost cutting, the governments are doing the more or less usual things. It's like tax relief, tax breaks, and that has been the case in Kazakhstan and the other countries in the region. There are also some cost cutting with risk associated costs that also are trying to do by creating this platform as the AIFC. But I want to talk more about the improving the funding. And there are two ways. You either create the new sources of funding, or you create the channels to transform the existing savings into investment. And then if we look, for example, for the first and most obvious case in terms of the crisis, the government subsidies, there's a most direct, most ingenious way to improve funding for the economy. And then this works for the countries which have ample fiscal space. This thankfully was the case of Kazakhstan because we had the stabilization fund, we had the oil fund that helped to provide the fiscal stimulus, which was accounted for about 8.5 or 9% of GDP. That was, and a lot of it went to the fiscal stimulus to support the economy, to support specific manufacturing projects, specific employment projects. But this is, I know this is probably the most ingenious way. But then if we look about more sophisticated ways, and then of course we are talking about regulation and providing space, providing environment for the new channels to grow. And as Mr. Nazirov was pointing out, the capital markets, this is very important source of funding, very important channel of funding, because It's equity financing, it's more sustainable debt financing, it's better than banking, especially during the crisis. So we have to create the right environment, the right ecosystem, I would say, to do so. And I'm sure that my Uzbek colleagues are doing the same with the Capital Markets Development Agency. So what we have done on the creation of new sources, we have, of course, introduced new funds. Last year, for example, the Kazakhstan has launched the Foreign Direct Investment Fund, or Kazakhstan Investment Development Fund, as we call it, which is ready to provide one-to-one funding with any potential foreign direct investors. And basically, they are sharing the cost, they're sharing the risk, which is more important, I guess, for the investor. This is the government fund. It has received the budget directly from the sovereign fund, and it has already invested in a number of infrastructure projects. So I think this kind of instrument, when the government says that there is an instrument, there is an investor, which is backed by the government, which is willing to invest in the country, was co-invest with the country with a foreign direct investor. This is the right instruments to go. This is the right fund to go. This is, of course, not the very innovative product. I think there's Russian fund for direct investment has been active and has been quite successful in the past few years. So Kazakhstan introduced it last year, and I think this is one good example how the countries can do that. But of course, as I said, this requires some funding. This requires some money to be put in the beginning. And that's why it's also important to have this international or bilateral, multilateral funds. And I saw the recent news of the, again, Uzbek colleagues, that they're putting the bilateral fund with the DFC in the US. I think this is the right example how the countries can cooperate with the developed countries such as US, or the same can be done with the UK, or even big countries in the region like Russia and China. When you put the fund together, that would invest in sustainable economic supporting projects. So I think this is a very good example. And lastly, coming to the building the environment, I'm very much in line with what Mr. Nazirov said. We have to create the right environment. We have to create the right regulation, the right rule of law. And that's what we did at the AIFC. We have created the framework. This is the independent jurisdiction with framework, legal and regulatory framework based on the English common law. And I think this is very important because this is the first such initiative in the region. We have invited British judges. We have created the arbitration center, the international court. And we're proud to say that we are probably the only platform in the region, the vast region of Central Eurasia, that actually has this. And I have full confidence in our legal system. And we've seen some trust from international partners as well. So we today, after 2 years, we have about 600 companies registered at the AIFC. And during the COVID, during the pandemic, it was already 70 or about 79 companies joined us during the pandemic. So I think this is a good result. But I'm not preaching the AIFC itself. I'm preaching the right ecosystem. So one example, for example, that we did, it was the private company. It was a private businessman, I would say, inventor that has created a crowdfunding platform at the AIFC. And it was created only at the beginning of the year. And during the pandemic, under the lockdown and during this challenging times of COVID, they were able to sign about 200 contracts already. They're helping small and medium enterprises, mostly small enterprises. And they're raising money at their crowdfunding platform, and they already have about 200 contracts. Each contract is about like 10 to 20 or to 50 thousand US dollars. So they're small, but they're helping they're helping the small businesses which are suffering the most during the pandemic. So already they've raised about 1 million US dollars, which I think in the current times of the crisis is a very big achievement. So I think that's the very good example when the government creates conditions, government creates environment, and lets the private business to come to raise to the occasion and do both good business and also provide this funding for the economy. So this is what I wanted to say. I'm happy again to answer the questions. There are many things that can be done, and I think that's I'm happy that we have this regional platform to discuss, and we've actually discussed last year in the CAMCA forum what we can do, and this year I'm just happy to present that we have done good progress. And I have full confidence that even during the challenging times, the government and the business can come together and provide these opportunities for the economy to grow and recover from the crisis. Thank you.
Thank you, Raul. And I would like to turn now to Mr. Nika Kurdiani, who will present his views from banking sector perspective on funding opportunities. And I'm sure he will have some comments on the previous speakers' notes as well.
Yes. Firstly, thanks a lot for inviting TBC and myself. It's really a pleasure to be on this forum and on this format with the colleagues. You know, I'll give you more perspective of private sector and then private company in terms of Georgia and TBC, who we are, what we are doing in Georgia, you know, and what we've been doing in COVID and post-COVID times. I mean, hopefully we can call the times which are coming post-COVID very soon, and also give us a bit of perspective what we are doing in Uzbekistan. So first, the TBC is the Georgia's and I think Caucasus' biggest bank in terms of assets. We are listed in London, member of the FTSE 250 index. In Georgia, we operate in all the segments, basically starting from startups, small micro, small business, medium corporate, and retail, all types of retail business, to high net worth to mass market retail. We are a very digital institution in terms of the way we do business, the way we serve our customers. For instance, one of the statistics which makes us very happy is that 94% of all transactions or interactions with the customers happen through digital channels without coming to the branch. This we're doing with various channels, starting from mobile, internet banking. We even have our own fully digital mobile application-based bank in Georgia, which was launched 3 years ago, and now has more than 1 million downloads in a country of 3.7 million, called Space. And basically what we are doing there is that we are, in terms of market shares, we are approximately 40% market share holder. In retail, it's more, about 40. In SME and micro, it's also about 14. Corporate, something similar. In terms of assets, we are the biggest. In terms of retail assets, also we are the biggest. So basically what I want to say by this is that we are a dominant player, which is holding the opportunity and the chance of shaping the market trends. And it is very important that these private institutions, which are big, which have the influence and which are developing actively, they also influence and have this positive, so to say, externality on the market. Would it be in terms of shaping the funding sources for SMEs and businesses, or developing the capital markets locally? In terms of financing, for instance, for SMEs during COVID, and let me move to the COVID topic. What we did throughout the last months was that we never stopped lending, firstly, and this is a very important message. We even launched certain products during COVID to support SMEs. For instance, we have for several years now
I think we have some technical issue. So why don't we give like 30 seconds, and if Nika can come back, we'll let him continue. If not, then we'll ask.
I think I'm back.
Ah,
so,
okay, good.
Yes. So I was saying about working capital. We launched a separate working capital product without collateral, because in our region, I guess also in the countries present on this meeting, collateral is an issue, right? For every SME loan, we need collateral coverage, which is about 100%. And this is a topic which we also have to impact and influence, because in reality, in developed countries, we see lending, cash flow based lending. And this is something definitely TBC now is working a lot on, because we understand that, the new business will not develop in a way we want them to develop and with the pace we want them to develop if we do not provide them flexible funding facilities. Now, what we see also in Georgia, and we partner with several companies, several funds, we see also developing the mezzanine financing, right, where we see the quasi-equity instruments coming to the market. We have several institutions present in Georgia, and we as a bank partner with them, not talking about the international financial institutions, which were mentioned also on this call, EBRD, the AIFC, and so on and so on. So I think the bank plays a major role in this, and especially in COVID times, it is very important to provide funding for businesses, to continue funding for businesses, and to even be creative in coming up with certain new instruments and products where we can support the businesses to continue their operations. Of course, we are also partnering with government agencies where we're taking active part in developing the guarantee schemes, for instance, for the support of businesses currently, and it is already launched. There was a very good product and is very good product of supporting mortgage lending and developer businesses, because we are a country where we have a very big sector in real estate development, and so on and so on. So the bank played a very big role in that. Also, just to deviate a bit from the funding topic, TBC plays a massive role in business development support, which would not be only loans. In education, for instance, in e-commerce development, we understood that in COVID times especially, we saw a big pressure coming on online sales, right? So we launched a program where basically we onboarded more than 300 businesses. We basically financed their e-commerce platforms, their web shops, and we onboarded more than 300 companies for them to have the chance to sell online. As TBC Group owns several, I would say, biggest platforms, e-commerce platforms in Georgia. We run an ecosystem where we have approximately 70% market share in e-commerce traffic in the country. And we allowed these businesses to shop and to place their products on those platforms, apart from the fact that we also help them to build their own websites. And this was done within the last several months. Now coming to the Uzbekistan story of TBC, which started several years ago, and absolutely I would agree with Mr. Nazirov that the environment here has been very positive, and we are present, I would say present from the first day of arrival back 3 years ago, where we started thinking about entering this country and investing into this country. Now after 2.5 years, basically, we have a Greenfield banking license, which is launched already. We are majority shareholder in one of the biggest payment institutions in Uzbekistan called PayMe, where we have already, and we are happy to serve more than 2.5 million registered customers, which is a massive number. And basically this happened just in 2 years, you know. So this tells a lot in terms of the environment we had and the welcoming environment, I would say, because otherwise it is physically impossible to set up in 2 years this kind of operations. Out of these two, 1 year being COVID year, you know. So in this COVID year, we were able to launch the banking operations. We got the banking license back in May, and starting from October, we started onboarding customers in live, basically production mode. So here also we are seeing the future very digital. We said that we are launching a digital bank, basically, which would be physically running no processes offline. Everything will be through the application and through the digital channels. And we will be focusing on private individual and the small and medium business and micro business segments. Basically, firstly launching with private individual and then venturing into the small and medium businesses. Very big focus will be placed on deposit gathering, and as Mr. Nazirov correctly mentioned, local currency funding is important, and this has to be developed. You know, we have to contribute to the trust to the banking system. You know, the more we do collectively in this regard, the better the penetration of banking products will be in the country, and definitely we see a very big upside in this because, honestly speaking, starting back 3 years ago and today, the situation is dramatically changed. If back 3 years ago, there were just several banking applications on the market, now we see every bank developing its own digital application, you know, offering new products to the market, and the market becoming literally much more competitive, which definitely is good because otherwise, you know, the improvement and the customer trust will not increase. So basically, this is in a nutshell what I wanted to tell about TBC in COVID times and TBC in Uzbekistan, and I will be happy to answer the questions afterwards. Thank you.
Thank you, Nika. Without delay, I would like to ask now Abdullo to make his presentation. And just for the sake of the time saving, so try to keep it around 8 minutes if you can. Thank you.
Sure. Thank you very much, Dr. Tsereteli. Hi, everyone. My name is Abdullo, and I'm CEO and co-founder of Alif Bank. And I'll try to give you a similar case study and example from Tajikistan's perspective. Hopefully, it will give some color. And I have some slides to share. All right. Can you see it well, Dr. Tsereteli? All good?
Yes.
Right. 10 years ago, when I started my career in a UK-based financial consulting company, one of my first projects was to help write a scoring model for one of the largest Russian banks. And back then, I had no idea how I might ever use those skills when I eventually come back home. But when I returned to Tajikistan, I realized that we have one of the highest interest rates and one of the highest NPL ratios in the world. Banks could not adequately score clients and they did not have the technology to provide diversified microloans efficiently. As a separate problem, there were also very limited payment technologies, and making a simple utility bill payment would sometimes take hours standing in the queue at the banks. So in 2014, with two amazing people and my dear friends, Zulshor Rahmatulloyev and Firdaus Mirzoyev, we established Alif to provide Sharia-compliant, technologically driven credit and payment services. And today, with over 400 people and over 300,000 users across various products, Alif is transforming and leading these sectors in Tajikistan, expanding internationally, successfully having launched in Tashkent, Uzbekistan. And I just join all my previous colleagues in thanking the regulators in Uzbekistan for making it fairly easy to invest, to be a foreign investor there. And we've been thankfully profitable every year since our founding, with about $12 million in run rate revenue at the moment, and our target $150 million in terms of revenue by 2024. Let's dive a little bit deeper. The average salary in Tajikistan is around $140 a month, and the cheapest washing machine is about $200. So what we did is we established partnerships with over 1,000 merchants, and as one of our core products, we introduced interest-free credit, whereby the family could get the washing machine now and pay for it in 10 installments, $20 each, and we earn a commission from the merchants. So we help with their sales. Merchants are happy, clients are happy, and we are happy. Win-win-win for everyone. Our customers love us, and as we increase the number of merchants and the products, the client retention rates have been growing, and the service issues rates have been going up. So numbers that we're very happy about. And the process is fairly easy. So it's a simple QR payment, either at the point of sales or online. And let me talk briefly about our payment solution. Remember, I told you that making utility bills used to take hours. So now it takes seconds. In 2018, we introduced Alif Mobi, and it brings hundreds of services to your fingertips. And today it's the #1 financial app in Tajikistan, and we've already received the license to launch in Uzbekistan as well. And the problem is huge. Even the money that already goes into the plastic cards, which by definition would be easiest to spend as non-cash, spend it online and so on, 94% of that money goes out again through the ATMs. And only 6% of that money ends up being spent non-cash. So, and that was in total about $1.3 billion last year, and the figure is growing very fast, about 40% a year. So this is the market we're addressing right now. At the center of everything we do is our people, our technology. We've by now built a very strong IT team of about 70 engineers, and we've written all of our software, all of our main software ourselves. Our team is very young, dynamic. The average age is 25, And these technologies that we've written are not only serving us, but sometimes we're receiving offers to buy these softwares by foreign banks. At the same time, the top 20 people in our team are some of the best experts in their fields. I can talk about them for hours, but I know we're fairly short on time. And we've been working with a number of partners. I want to mention one example. We signed a strategic partnership agreement with Visa this summer. And to my knowledge, this is the only strategic partnership agreement in the Central Asian region that Visa has with a commercial bank at the moment. And I think TBC is another one in the Caucasus region. So we're quite excited about the possibilities there. And to summarize very briefly, the macro indicators are fairly interesting in this region. It's just Tajikistan, Uzbekistan combined. We're talking about 45 million people with annual $60 billion in spending. And it's a very young population, which of course is more tech savvy and with better internet penetration. Consumer retail financing is, we expect that will continue to grow at triple or high double-digit rates, because overall this segment has largely been overlooked by the traditional banks due to the small checks, which are not economic unless you use technologies. And Sharia compliance will unlock much of the market in this particular part of the world. So another dimension that we believe is occurring, especially in Tajikistan, is that the mobile payments are likely to leapfrog the whole plastic card infrastructure, because the plastic card infrastructure, like POS terminals and so on, are quite expensive, and so far the penetration of those are very limited in Tajikistan in particular. And of course, the QR payments and mobile wallets are much more efficient. So those are some of the macro hypotheses for the region, and that's it. Thank you very much.
Thank you. Thanks for very interesting presentation, also for keeping time short and concise. I would like to ask now Mr. Bassam to share his views on what's happening with funding opportunities and capital market developments in Afghanistan and region.
Good to be here. Thank you very much for the invitation. Glad to finally meet all the panelists. Great input. It's amazing to see what's happening in the region, and we're glad to be part of the region and hopefully grow with the region as it's growing. As everybody knows, Afghanistan, we're still going through a lot of political issues, war and what have you. But as we are resilient people, we have been making quite a significant amount of progress, talking about rule of law, banking laws, mining laws. We've been involved in a ton of different kind of laws, including Islamic banking laws, that is really hoping that they will add value and eventually build a platform for a proper markets for Afghanistan. Unfortunately, we don't have a stock exchange yet, even though me and my business partner, we own the license for the exchange. We're waiting for the right time. We're also working on commodities exchange. That should help with the economy of the country and create the type of capital markets necessary for Afghanistan. So the issues that we're facing right now, the withdrawal of international troops from Afghanistan, our GDP has been significantly impacted by COVID. We're still depending on a lot of donor money. Majority of our investors have been DFIs, basically the likes of World Bank and ADB and what have you. So that's where we get a lot of our capital. The sectors that have been doing very well is the banking sector is growing at a very fast pace. We have the telco that's growing quite well. And through our telco, we have mobile money, pretty much all the telcos. There are 2 Afghan telcos, 3 actually, including the government. And then we have Etisalat from UAE, we have MTN. There's a lot of great progress in that area, including dark fiber. Internet is becoming more affordable for the community to use. So all of this is going to create that platform necessary to be able to have the kind of capital markets that we require. Right now, the source of capital, if you will, for majority of the entrepreneurs and even businesses that are large businesses, aside from telcos, they have had, they have balance sheets that can afford to bring in foreign investors and what have you. But for the locals, for SMEs, it's still family and friends. And there's a lot of push from the likes of the World Bank to do financial inclusion. When I said the market is growing for banking, we barely have 11% of the population that has access to banks. So, which means there's a significant amount that we can capitalize on and be able to increase financial inclusion. When it comes to capital specifically, as I said, it's family and friends still. Banks have a hard time loaning due to regulation, really high regulation. We have IMF looking at us, the donor community, so we have a lot of benchmarks to look at. Therefore, our banks are very conservative when it comes to basically lending out too much money. There's a couple of funds, private equity funds, but also DeFi backed. In other words, it's the same sort of pool of money that keeps coming into Afghanistan. We do believe in obviously private sector getting involved in being able to contribute to those, to the capital markets. So some of the stuff that we hope to achieve over the coming years, and especially be part of CAMCA, is the expansion of, or the extension rather of what's being developed, for example, at AIFC. We've done some work for AIFC out of Afghanistan, believe it or not. We have started some initiatives such as tapping into the green bond market, for example. So what we're doing is we're trying to access capital markets overseas through green, sustainable, and social bonds. We've been working on 3 or 4 projects. On the side of Sukuk, for example, we're underwriting the loss for Sukuk as well, and we're hoping that would stir something. We're dealing with credit agencies to rate various different corporations, but given the fact that the country has not been rated, it's creating certain challenges. We're looking at expansion in renewable energy, transportation, banking, aviation, and of course, all of this is going to require a lot of private money. We're hoping that working with the government, being able to get some of the regulation necessary. Of course, security continues to be a challenge. There's a cost to every private investor that even walks around the city. So that's things are slightly priced because of the security situation for individuals, for companies, and what have you. For the region, our hope is, I was thinking about this, and we've been discussing it for a while. Some of the work that we did with AIFC, for example, they're looking at their commodity exchanges, and we could all see a lot of consolidations in the region. Even in Afghanistan, consolidation is already happening both in the banking sector as well as in the telco, because a lot of different competitors came into the market. But imagine a day if we had a more centralized capital markets or commodities market. Let's call it CAMCA commodity exchange or capital markets, where we can leverage the whole region and be able to scale up from there on. I would love to say, for example, Alif or TBC to start building relationships. I'm advising 2 banks right now, 3 banks actually, 2 private, 2 public and 1 private, where we're looking for partnerships in the region. Obviously, our biggest trade partner closest to us is Uzbekistan, but nonetheless, we have a lot of good work with Tajikistan. In fact, one of our telecommunications company just bought 100% of T-Cell. It also happens to be a client. So there's a lot of activities that we get involved in both regionally and specifically in Afghanistan. As I said, we're looking forward to being able to integrate and build partnerships in the region through CAMCA and other bilateral agreements that we have, or trilateral agreements that we have. And I want to conclude with 2 other things that are up and coming in Afghanistan. The mineral laws has been revised again. We're hoping to, that's sort of the treasure that we have that would like to explore further. We have a lot of interest from foreign investors in the region, as well as from Europe and North America. That has been really making good progress. In TAPI, as everybody knows, probably the work has been started from Turkmenistan all the way to India. That should really connect the region to energy. We continue to need and continue to purchase a lot of electricity, both from Tajikistan, but mainly from Uzbekistan. They have been a great partner. And we're hoping to develop some of our own grids. Right now, our grids are fragmented into four areas in the country. Only 30% of the community have electricity. I'm talking about the whole nation. So a lot of growth opportunities, a lot of challenges as well, but we're very hopeful with organizations and platforms like this. We can build stronger and better partnerships where we can actually develop and scale up together as a region. That's all I have for now. I'll be happy to take any questions from the audience when the time is right.
Thank you. Thank you very much. Thank you. And now I would like to turn to Mr. Demirel from Mongolia. Here's the latest hour, I guess, and so, but he's still awake, listening to us.
I had 3 cups of coffee.
Okay, please go ahead.
Well, thank you very much. It is my pleasure to be here with you all today. Briefly, what I would like to touch upon in the context of today's topic is that I would like to raise a few points. First, the challenges of raising capital in CAMCA region on a more aggregate level, and potentiality of establishing Central Asian Development Bank or CAMCA Development Bank, and a little bit of my organization's side of story in helping business community during COVID. So the Central Asian financial systems in Central Asia are adjuncts of planning authorities, which often leads to accelerating repressed inflation and politicized monetary policies under the control of national political establishments. And some of the Central Asian countries has a very few policy tools because of the underdeveloped financial systems, and this is generally ineffective. However, it is very important that the relevant countries need to recognize that the financial cooperation between the countries is necessary, and the advancement of financial and economic collaboration to the next step requires strong commitments jointly, all of the countries. And we all know that there's a largely unrealized potential for economic growth in Central Asia, and all of the colleagues just in the panel just touched upon this. The region's resource endowments and complementarities between development and Central Asia suggests that a sustainable growth process taking advantage of this potential could begin with regional financial cooperation, such as connecting through fintech, capital market, and creating Central Asian stock exchange hub, just like my previous colleague mentioned, that the Central Asian stock exchange hub that allows dual listings among countries. For now, correct me if I'm wrong, Kazakhstan, Kyrgyz, and Uzbekistan and Mongolia has sound stock exchanges, and the similarities are all created early in the 90s with different volume of transactions, and most of them are partially state managed or owned. Yet some of them are ineffective and less listings due to state management or ownership. And we all admit that CAMCA country is becoming a global economy strong player, and there's an increasing need of intra-engagement between countries to firstly tackle political issues with active dialogues. And we have to find an answer to a question like, is there any correlation, causal factors between politico-economical system and capital market development? That's the main question. And if political and economic system does not give freedom to market, the accountability and transparency of companies are questionable to all investors, both from the region and non-region. For example, very technical example, from one hand, companies' performances should be expressed in real audited balance sheet and have to pass due diligence from the investor's point of view and in accordance with international standards. But yet, one of the most common cases in our region is that the companies have two balance sheet reports, that is one for tax offices and one for themselves. This is pretty common in these countries, including Mongolia. And at least without the real balance sheet, capital market cannot be developed. In other words, IPOs cannot be, initial public offerings cannot be launched, and it should be liberalized for that reason. Also, there are tendency that the least developed countries or emerging countries to benchmark, mechanically benchmark or copy paste from advanced economies to developing markets. It just does not work necessarily. that means we have to decorate it with our own characters in it. And banking system from the supply side, domestic accumulations such as savings, etc., should be high enough to invest into a capital market, and capital market, and also by the households within the capital region. And that is not most likely the case in these countries. And second point that I would like to raise is that, as I mentioned, establishing Central Asian Development Bank to effectively realize the potential of regional financial cooperation. There's a growing need to formulate coherent policies and strategies and ensure sustainable and prudent use of scarce resources is now in this now unbalanced region. Increased development support to the countries is indispensable. For now, various international organizations, international financial institutions are playing a substantial role in Central Asian economic connectivity. However, these IFIs do not have enough resources to meet the needs of Central Asia and the rest of Asia as well. I mean, we all remember that in 1997 Asian financial crisis, during that time, Japan has proposed to set up Asian Monetary Fund to stabilize the currency and exchange in the Asian region. But this idea faced challenges from International Monetary Fund and its some members. However, in recent years, the voices in restoring this such kind of institution is rapidly increasing. So perhaps such a formation structure of or Central Asian Development Bank could be benchmarked in Central Asia region, and pushing this idea to initiate Central Asia focused multilateral financial institutions such as CAD will complement the role of other international financial institutions, financing projects such as infrastructure connectivity, gas pipelines, railway connections, mining, agriculture, e-commerce, and investment platforms. Therefore, the role of each government is the most important in promoting the development of financing accessibilities, and governments should join together and make it happen, and to lessen the country risk as much as possible by pursuing domestic political stability. Last but not least, today the International Monetary Fund made a statement that the global economy will shrink 4.9%, and in 2020 and in 2025, global GDP per capita forecasted to be lower than the last quarter of 2019. It means poor countries will be poor, and frontier and emerging markets will be impacted heavily. And this means we all need to make an effort to start acting strongly to promote and realize CAMCA's cooperation in every sector. So last point, in Mongolia, everything is changing. The conventional doing business and the regular code of conducts of a variety of social economic affairs are substantially transforming due to COVID, with a great uncertainty and great unpredictability. So COVID-19 crisis is largely impacting on economic and climate concerns that require firms to refocus their business plans and operations, and that imposing greater reliance on digital infrastructure, which means also the increase of cyber risk exposures. To optimize recovery, organizations will need to build greater preparedness into our business models in order to be more resilient in the face of future disruptions. And the World Economic Forum survey among leaders says that the unemployment is the main concern among executives and closely followed by continuous infectious diseases, while fiscal crisis is the third top risk for doing business globally. It also concerns the CAMCA region as well. Also, problems such as travel restrictions, logistical limitations causing tremendous amount of pressure to business transactions. In our case, we carefully analyze the general situation, trying to make things a little bit better by helping our clients by providing digitalized project matchmaking services with investors. What we do is first developing business projects with high quality, with the international, in accordance with the international standards and with sound bankability. And secondly, when the project is ready to go, we upload it on Belt and Road International Project an investor matchmaking cloud platform. And this cloud platform is actually supported and financed by the Chinese semi-government organization called the China Federation of International Commercial Allies.
If I may ask you to wrap it up, because we have limited time with Mr. Nazirov. We wanted to ask him some questions before he leaves us. So if you could wrap up, please.
Absolutely. So basically, you know, what I'm trying to say is that Mongolia is also facing the same challenges and problems, but also trying to come up with the better solutions to tackle all these problems during the COVID. So thank you.
Thank you. Thank you very much. Apologies for intervening. We have several questions from the audience, and I also had a few questions, but I would like to start with questions to Mr. Nazirov. There was a question from the audience that you mentioned a good point that if we cannot ensure the trust of local investors, how we can expect foreign investors to come in, especially during the COVID economic recession. What are the three key factors the respondent is asking helpful in building the trust of investors in Uzbekistan economy? I think you partly answered this question, but if I may add to it, privatization of big state-owned enterprises, do you see that process being part of the capital market development going forward?
Thank you for the question, Dr. Tsereteli. I think I'll answer, again, the first question I'll answer on privatization separately. Building trust is extremely important. And it's a history, it's a track record. We all know it. People will judge us, everyone's action, the government's action by the track record. So in the agency around capital markets, what we're trying to do now, we're doing best we can to ensure we try to build a solid track record on enforcement, for example, to make sure we keep the bad guys out, as they say. We need to make sure we keep the bad guys out of the market and make sure that the market is open, transparent for the honest investors, for the honest entrepreneurs, honest business people. And the same applies to all the state-owned enterprises that participate in the capital markets, or they operate in the form of joint stock companies, which we enforce. Also, it's transparency. We try to be as open as possible so that we are predictable, and the investor base and the population base understands on what basis we make our decisions. So being transparent, I think, is also an extremely important point as we develop trust of the investor community. And also, with respect to, I would say, maybe a very technical point, but national currency. The reason I'm talking about national currency, I was a regional banker with EBRD before my career with the government of Uzbekistan, and I was lucky enough to work in many countries that colleagues are representing, including Mongolia, Kazakhstan, Tajikistan. I think the only place I probably didn't work was Afghanistan, because our bank didn't operate. And what I have found, common problems that all emerging markets and also in Central Asia have had, we had constantly devaluating currencies. If you look at the history of our currencies, you'll recognize that the trend is only one way, yeah? And how do you break that trend? And the building trust in national currency, building trust in the national economy is of extreme importance, because if we cannot build trust in a national currency, we'll continue relying on external debt financing. Domestic investors, domestic savers will hesitate to invest in domestic securities because there will be fear of devaluation and losing money. So we need to find a way to break that circle. And that brings us to our economic policy, because if we will fail in designing accurate, appropriate economic policy to ensure that our trade balance is in order, that our budget deficit is in order, and that nation and the economic activity of every country strong enough to build domestic savings, okay, not just spending on consumption, that we do provide extra activity and we save domestically, and that we're able to export products, you know, to neighboring countries and keep our trade balance in order. That will bring stability then, I think, an outlook for stable currency, and then trust in the national currency, so that we can build sound financial ecosystem and capital market system. To answer your question on privatization, absolutely. As we designed and drafted our capital market strategy, we have put a cornerstone on the supply side of securities, supply side of new good companies that will bring to the market have to come from the probably top class, best state-owned enterprises that we have. So ideas of kind of national IPOs or finding a way where we can distribute national wealth and share the national companies with domestic citizens, with domestic savers, I think is something that appeals to me personally. I have looked at the Polish example. I think they did a very good job in that back in middle of 90s with the national investment funds that they've put together. So we're looking at that experience, and I'm personally very much supporter of privatization through capital markets so that you can share the wealth of the nation with its citizens. I don't know if I was able to answer your question, but.
Absolutely, thank you so much. It's just important to see the commitment of Uzbek government and your agency to this process, because I think that's we followed some of the pretty important presentation of President Mirziyoyev at the UN session, and his commitment to reforms, I think, continues to attract attention to Uzbekistan. And we've heard today from other presenters, not just you, but others from colleagues from Tajikistan and Georgia, how your reforms is actually stimulating many positive positive development and greater energy in investments, in trade, and in regional collaboration. So this is essential. So if you need to go, we'll let you go now.
Thank you very much, everybody.
Thanks for joining us.
And we'll be in touch. Take good care. Thank you so much.
Thanks a lot. So my next question will go to Mr. Bektemirov, and this is also from the audience. Attendee is asking about shareholders of AIFC. Is it governmental, or is it co-shared with private and foreign shareholders? I know some answers on these questions, but I would like you to answer to this. What is the profile of your registered entities, companies at your stock market who are interested in AIFC the most? Who are the companies who are interested in your stock exchange and the financial sector?
Thank you. So the core of the AIFC, the core of the ecosystem is the regulatory bodies. So this is the regulator, the court, the arbitration center. There's also the AIFC authority, which is the key project management office. Those are government funded. These are the work receiving budget directly from the state budget. But when it comes to the actually marketplaces, market providers, so for example, the stock exchange is partially owned by AIFC authority, so partially owned by the government. But then we brought NASDAQ, we brought Shanghai Stock Exchange, we brought Goldman Sachs, we brought Silk Road Fund, which are the shareholders of the stock exchange, because this is the participant. We don't count as the body, AIFC body, it's the participant. And then when we look at the larger ecosystem, we'll have, for example, the completely private crowdfunding platform, which I mentioned, iCapitalist. We have private companies, private exchanges working, the crypto exchange working in the ecosystem. And when you look at the profile, to be honest, because we just started recently, most of the companies are still small companies. So there are a lot of them are fintech companies because they're more, they're agile, they're more quick to register, and there are a lot of startups. So we have a lot of fintech companies in the financial center, but also we have insurance companies. We have, for example, one insurance company that was re-domiciled from Bermuda to captive insurance company, which was re-domiciled from I think Bermuda to AIFC. We have different, we have the banks. We have, for example, the branch of China Development Bank. They have opened the China Construction Bank. They have opened their branches here at the AIFC. So the profile is quite diverse, both geographically and according to the size. But then I think when it comes to the private, the stock market, then we have we already have a handful of listings. We have many listings. We started with the first IPO of the national company, which is the Kazatomprom, which is the largest uranium producer in the world. We started with this, and I think this is goes hand in hand with what my colleague from Uzbekistan was just saying. We have to bring the good assets to show. And then that was the first IPO, and then we've got the listings. We actually had a Russian company listing their securities in our stock exchange. We have quite a good number of the bond issuances. And we were expecting the 2 more national companies to be listed this year, but obviously because of the COVID situation, they will be listed next year. And then the very last example, I think, which is, I know probably will resonate with my colleague from Tajikistan, our bank, the Kaspi Bank, which is now going to London. They will be conducting their IPO in London. They're more than bank. They're just neobank. They're actually fintech. The big fintech with big ecosystem. They'll be listed in London, but they'll also share their offer their shares in our stock exchange as well. So that's the quick question. The quick answer to the question. Again, the budgeting for the regulatory companies is from the government. The market makers, the market participants are both private and government owned. And if you look at the participants, they're quite diverse in both countries. We have about, I think, 70 countries, something like that. I actually have the numbers, but I don't have time to pull them. But we have about 600 companies from different countries, and ranging from small fintech to actually the branch of one of the largest banks in the world.
So some of the priorities that Mr. Demberel was emphasizing on your financial center could be as at least one channel of raising capital regionally for companies.
Yes.
Yes.
This is true because our goal from the very beginning was to improve the financial sector, improve the financial intermediation, to provide as many different channels, as many different sources as well. Because we see that there is a lot of savings in the country, there's a lot of interest to the region from outside of the world, and we just need the sound financial market that would allow the savings or funds in the region or in the country, in the region or outside of the region to be invested in the region. And then when we were talking about the investment opportunities in the region, we all know that the Central Asia region and Central Asia, including Russia, Mongolia, with China, is quite attractive. But there are many risks, and then what we're trying to do is alleviate this risk to provide a sound ecosystem, sound framework, sound environment for the investors to come and invest. And it's why when we talk about the regional financial market, the regional capital market, I think this is, I would offer to my colleagues to consider AIFC because we are operating under the international standards. And I don't see, so one of the questions, there's two approaches, the British system, whatever, and the local policies. I don't see any contradiction. The local policies, the policies on development should be local, should be regional, but we can all use the international standards, international rules, and after all, rule of law, this is something international. And when we look about 2 big systems, the continental and English common law, we just see that for financial market, common law is just more, it's better. And most of the financial centers like Singapore, Hong Kong, Dubai, London, New York, they all operate with the same, under the similar system. So I would just encourage people on this panel and the people who are listening to us to just consider this. This could be the international capital market, the regional capital market. Of course, it will be more difficult for the individual investors to come to this platform. But for the institutional investors, we already have the market, we already have the rules, we already have the market makers and the market. So this is something that can be good for the region.
Thank you. Thank you very much. I would like to ask one question now also from the audience to Mr. Kurdiani. It's about Uzbekistan, and probably you are most qualified to answer this question. Is about mortgage capital market in Uzbekistan. So what's the status of it, and do you see, what is the potential of mortgage market development in Uzbekistan?
As far as I know,
sorry, if you want to comment on maybe parallels with Georgia as well, you can obviously do that as well. Thanks. On this subject.
Yes. So firstly, I think Uzbekistan is at a stage where the real estate development boom basically is not yet there, and then we see it starting. We see basically the flow of real estate offerings on the market increasing massively. Definitely, there is a banking product which is called mortgage, and there are state subsidized and state promoted programs for mortgages, various types. And I think that, but the market, in my opinion, is underpenetrated. It is underdeveloped in terms of value proposition, and definitely there is a very big upside, which is now coming, and we see it basically year on year in terms of growth and in terms of penetration and in terms of activity from the banks. In our case, we are also foreseeing launching a mortgage product sometime next year. This is how we plan basically for this point of time. And the market is there for primary mortgage loans, for secondary mortgage loans. Basically, the penetration is not high. So I definitely see it coming. I definitely see it developing a lot. And yes, compared to Georgia, in Georgia, I think we had this boom coming in already back, I don't know, 15 years ago, where the real estate development massively started, and it is still going on. We are still in that phase. I had a chance to work in Kazakhstan for 4 years in the beginning of 2010, and then afterwards until 2014, and I saw post-mortgage boom period there as well. So there are many pitfalls to consider, actually, and for banking sector, especially in terms of how to run the product line, how to make sure that during the crisis, the customers are, not under pressure, under foreclosure procedures, because we have to underwrite the loans responsibly and in a very proper way, in a very careful way. So there are many details which are to be considered once setting up the mortgage lending program. But I think in Uzbekistan, the country is now on a very big growth stage. Mr. Dembro mentioned IMF figures, and then we saw also for Uzbekistan that this year it's forecasted for Uzbekistan to grow almost 1%, which, if we look around the world, it's a rare case. Next year it will grow, as IMF forecasts, around 5%. So in this regard, I mean, this all will translate also in mortgage and real estate offerings, right? So I think the upside is there, and it will only increase and improve year on year.
Thank you, Nika. And next question is to Mr. Kurbanov. Abdullo, question is to you. Anonymous attendee is asking. His question is about percentage of he asked about debt, non-performing debts, probably that's what he means. And what's your bank do if your customers cannot repay, especially during COVID economic recession and uncertainty?
Sure. Thank you for the question. Actually, we have one of the healthiest portfolios in Tajikistan at the moment. Prior to COVID, our Par 30, that is anyone who has delays in payments by more than 30 days, that was at 1.5% of our portfolio. At the peak of COVID, it got up to about 3% of our portfolio, and today it has fallen back to about 2.5% of our portfolio. So situation is improving. In general, we follow the ethical, participatory banking, Islamic banking model to the extent that it's possible to do in Tajikistan. And when our clients have problems with payment, as it happened during COVID, we were the first bank to provide the easiest solution, just a website where the person can just apply for a restructuring. And we didn't charge for the vast majority of our clients who are on our main retail product, where we, it's commission based. We didn't charge any extra commissions. We didn't accrue any interest on those financings. So it was, purely, fully for the benefit of the client. And we, restructured part of our portfolio just under about 10%. And that particular portfolio has now again started to come back to normal and paying back again. And now it's healthy again. So that's hopefully answers the question. Thank you.
Okay, thank you. Now a question from Mr. Manzoor Rahman to Mr. Bassam. But before I turn to that question, I wanted to follow up one of the points you made about equity funds that are available now for investments in Afghanistan. Are those equity funds local or are they international? And if you can elaborate a little bit about local sources of investments, wealthy individuals or funds or whatever there is for investments for economic development. But here's the question from Mr. Rahman. He's asking about cooperation with Pakistan, our closest neighbor, that has been involved in import, export, development, and other trades with Afghanistan for a long time. We know the political situation is not easy. Bilateral relations are not easy, but what can you say about, why don't we start maybe with Pakistan relationship and then move to funding sources, local funding sources?
Thank you for the question. So as you correctly said, there has been political tension at times, but because historically we've had this great partnership in trade with Pakistan, it's sort of a codependent relationship that we have. I mean, one of the main things that our backbone to logistics is Pakistan. It has been for a long time. So we really depend on our export plus our import. So that's one of the areas that we've had, a lot of challenges, but without it, it would be very difficult for us to export anything, even though we have these air corridors to India, to Turkey, to Europe now, but it's still a challenge. Our hope is that over time, we develop that further where we can have railroads and other means of logistics to Pakistan. And, we have families on both sides of the border. I mean, I lived in Pakistan for a while myself, and then I moved back. So there's a lot of, there may be political tension, but when it comes to, livelihood and what have you, we have a great relationship with families. We have families on the other side of the border and vice versa. We import a lot of services as well from Pakistan. For example, majority of our auditors were branches of KPMG or EY that came from Pakistan, and they opened up branches here. They were managing a lot of the work that we have for auditing, what have you. Another initiative that I'm very excited about, and it's started by Afghanistan, a group of us started this called the Heart of Asia initiative, which is we're trying to connect basically a trade route between obviously Pakistan, Afghanistan, and Uzbekistan, where we can connect and help connect Pakistan all the way to Uzbekistan and the larger Central Asian countries all the way to Kazakhstan and what have you. So that's something that's going to take some time nonetheless. So in a nutshell, Pakistan has been a great partner historically, continues to be. We still have a good amount of population that lives in Pakistan. We have a lot of people that go to school there. We have medical tourism. Despite the fact that border gets closed, but there's always a way to get around it, and people do get around it. So coming to the funds, so there are particularly two funds. One is an international fund out of the UK that started in Afghanistan. Their focus was to start in Afghanistan, and now they have grown regionally. They have opened up offices in Uzbekistan as well as Pakistan. Compared to the capital markets or other funds, they're very small, but they're very strategic in how they invest. Part of the challenge is because as a private equity fund, if you don't have an exit strategy, I mean, you have an exit strategy, if you don't have capital markets or an exchange to exit on, management buyout, the whole concept has to kind of grow with people educating on managers and management of the companies that they invest in, that if there is a management buyout, what that would mean, just because I invested $1 today and I expect 5 in 10 years or 5 years, you have to pay me that 5 because of the valuation. So, we're going through that process. There's another local one called Afghanistan Growth Fund. The initial investor, I believe, was OPEC. Now it's DFC or DCF. So rather, that's local. Typically, they do a lot of debt. Mezzanine has been one of their sweet spot. They have been involved. They just raised more capital, so it's been successful. Just like, defaults that our colleague was talking about at the bank, we had some of those and then restructure some of those transactions for them. We get to do a lot of due diligence for their investments, so we get to ultimately see where they invest. Aside from that, AIFC has been very active, ADB has been very active, but those are the two funds that has done a great job in being able to cover medium-sized companies. On the local investors, because of the war in Afghanistan for the last 40 years, we've had quite a few big families that reside outside of Afghanistan. Uzbekistan is a great place, Tajikistan. We have people that reside in Russia for the last 20 years, Dubai, the US. They have come back and invested heavily, including beverage plants. They brought in Pepsi, Coca-Cola. They're owned by locals, they're investors of in those industries. Same thing with telecommunication, also invested by Afghans. In dams, electricity, solar power. So we have had quite a few great investors, local investors that invested in these sectors.
Okay, thank you very much. I would like to now turn to Mr. Demirel again. And this question also, I would like to other speakers to answer as well. And probably we'll wrap up after that because only 10 minutes left. So question is about, we've heard many times that, money is a problem. So if we had more money available in these countries, more funding available in our countries, in CAMCA region, then progress would be more visible and growth would be more tangible and so forth. But we also hear from those people who have money and who are willing to invest that there is a lack of so-called bankable projects. When there are issues between the, on one hand, you have funding institutions who are searching for good projects, but on the other hand, there is lack of qualified bankable projects. So can you comment on that? And do you see this as an issue, or it's invented by some of the bankers to make their life easier?
That's a great question. I think it's right spot on issue right now we are facing today, especially in Mongolia. The quality of the potential, the bankable projects are really low in our country. And there are few organizations are here to fix this problem, but it's not really sufficient. However, I think the question is more leaning towards to my experience since dealing with such kind of things. In our organization, for example, we receive project proposals. There are only 3 pages, just project descriptions. It's very vague. There's no, there's no very, there's no really calculation whatsoever. So what we do is receive the project proposals and develop the projects into a more of a international quality standards. And we do the bankability and pre-feasibility study of the projects using the United Nations special software. It's called the COMFAIR. It's been around since 90s, but it's been upgrading since then. And then we use that to calculate the financial part of the project. And we also use the European Standard of Project Handbook guidance to put all the wordings into a work package. That's technical part. And the second step is that once the project is ready to go, we upload it on the, like I mentioned, uploaded on the cloud, International Project Matchmaking Cloud platform that has almost 2,800 potential investments from 23 different countries, including China. And this platform is supported and financed by the China's Belt and Road Initiative. And I think I see this as one of the potential funding sources for the small and medium-sized businesses in our country as well.
Thank you. Abdullo, would like to comment next on the same question?
I think the main problem in Tajikistan when we talk about bankability is the ticket size. So if you were to look at projects under $100,000, you would have very good amount of nice, interesting projects to potentially invest that would be bankable. If you're looking at projects at $1 million, now you're talking about maybe a dozen or so projects, or maybe 2 dozen or so projects, right? But when you talk about $10 million, then you're running out of good options. And when you're talking about $100 million, then it gets really tough. So it's all about the ticket size.
Okay, Mr. Bassam.
That's very interesting. Yeah, for us, actually, it's more of the quality than the quantity. Because we're still in very early stages of growth, there's a ton of opportunities for investors to invest. We just lack security. That's the main reason that gives the investors a bit of a tension, if you will. However, we have a lot of large ticket size projects, dams, energy, the whole grid for the whole country, for example, dark fiber. So it requires a lot of, they're very capital intensive, right? We don't have it within our country to support such large projects. Therefore, we do want to bring in and attract foreign investors to do that. However, the push has been predominantly on financial inclusion in SMEs or micro SMEs, which is obviously very, very important. But we have failed to actually capture that. We have failed because of the standards we put together to the banking sector or regulation or donors or investors. It basically behooves 90% of those SMEs to be able to even apply for something like that. Just like the case in Mongolia, we get a half a page, for example, for a business plan, which is fine. We understand that that capacity needs to build over time. Nonetheless, we help with those. But the funding that comes for these micro level SMEs has been challenging because of the mandate from, and typically it's not an investor, normally has the donor in our case. It's so, the criteria is so high that it disqualifies a bunch of people. So we have to become a bit more innovative in allowing SMEs to participate in the not capital markets, but in the financial sector, if you will. But we do have a lot of larger hundreds of millions of dollars, $200, $300 million projects, quite a few of them. We just have to find the right partner to do it. And there's always a mismatch between the right investor and the right project. So we have the right investor, but the wrong project, or we have the right project, but the wrong investor. That has happened quite a few times. And those are the things that we're combing through trying to figure that out.
Thank you. I think it's a good point, and probably Bauer will tell us that his AIFC is the great place to match people, right people from both sides.
Correct.
I'll definitely, I'm happy always to tell that, but before doing so, I would just raise general issues. I mean, I do believe that there are investable projects. I do believe there are bankable projects. I mean, when you look at the economies, we are emerging economies. I think there's a lot of opportunities. There's still untapped markets. There's still good projects, and there's still, as we just saw, there's a large market. There's a young market. There's a lot of, there are good opportunities. But of course, there are the risks. I mean, let's be honest. We have political risk in the region. We have currency risk, and Mr. Nazirov was just mentioning that we have the constantly depreciating currencies, which is fine because their inflation rate is obviously higher. That's why you have the mismatch, and then it's fine. But it's not about the depreciation. It's more about lack of transparency or unpredictability of the currencies. So we have to solve this issue. I think we have to work on this barriers, impeding problems, the binding constraints before going to the market. I do believe that we have good project. We just need to, for example, if there's a foreign investor coming, then of course there's a currency risk, of course, because local projects mostly generate local currency revenue. And there are two ways. You either invest in a project which is has the export opportunity so that you could receive revenue also in US dollars, for example, or you just do something, and there are different instruments. You can have, CPI linked securities, bonds. There are ways to solve it, and that's why I think that we have to, again, coming back to the regulatory environment, we have to come back to the ecosystem when we can remove the risk. And I think my colleagues are doing and creating good capital markets environment, creating we have the good banks. And for example, when we have the Sharia compliant bank, obviously there are different risk sharing when compared to the classical banks. And that already proved that there are ways to redistribute the risks and find have the good matching. And of course, we're doing this as well, because for us, the risking is one of the main goals. And that's why we have created the company in this AIFC Business Connect. We actually sources the deals and structure the deals and using different instruments, different products, so that the investors would minimize their risks. But then, of course, there are macroeconomic issues that have to be solved on the macroeconomic scale, such as the currency risk. So I know the resume is, we can do it.
Thanks. Thank you. Nika, your last word, and then we'll wrap it up.
Yeah, I think I've been in micro SME business as well as in retail, but especially in micro and SME for, I don't know, last 17, 18 years in various countries. And I do not think that there is, the term unbankable is a proper one. We have seen microfinance practices implemented in Far East Asia, in our region, you know, and it's just about how you treat the customer and how you try to help him to give you the information you need to finance him. And there are many ways of doing that. You know, we have been implementing many different practices. For instance, household financing is one story where they give you literally their notes from papers, you know, things written on their papers. So you have to be good in understanding what's written in those papers. Business financing is a different story. I mean, there are African models which are fantastic social factor-based financing models, you know, and so on and so on. So I think it's all about, you know, how you treat this business, how you get ready to accept that business. And of course, there is a risk factor to that and regulatory factor to that. However, it's all manageable. And the fact is that there are many good companies who are growing in our region, banks, in financing businesses. You know, our growth has been on average, I don't know, 20% year on year, I guess. And even in crisis times, this year we are growing quite well, and year on year, and we're going to have more than 10% growth. So in this regard, you know, it's about how you treat businesses. And even, I mean, I just mentioned the example of TBC about startups, right? I mean, who would start financing startups during COVID times? We did. So there is a reason why, right? We know how to underwrite the risk. We know how to treat these customers. So I would say, you know, it's all about the approach and how well you are kind of ready to underwrite the risk and understand the risk properly.
Many thanks. I think we have pretty good understanding, general understanding, thanks to our great speakers today, pretty good general understanding of where capital market development and funding opportunities stand in CAMCA region, in Central Asia, Caucasus, Mongolia, and Afghanistan. What are the challenges and what are the new opportunities presented by, again, our great speakers today. I would like to thank you all for being part of this event, contributing your great thoughts and also sharing your experience. I would like to thank our audience who was listening to this discussion today. I would like to request our speakers to, maybe we should repeat this type of discussion in about a year or so, see where things stand. After a year, after COVID recovery, post-COVID recovery really starts and where things are at that point. So I'll take, without your consent, I'll take that commitment from you. And thanks again on behalf of Central Asia-Caucasus Institute, Ramsfeld Foundation, and CAMCA Network. Thanks again, and goodbye.
Thank you. Thank you.
Yeah.